a blow to it completely. Questions now of what the future looks like for the third player in the telecom space. I mean, the Goldman Sachs analyst may be smiling today, not yet at the 2.5 rupees target price that they had picked. But the fact that the Supreme Court has now come and said that any plea to recalculate AGR dues has been knocked out is possibly a death blow for Vodafone. Indus Tower, by proxy of the dues that Vodafone owes it, also falls. IIFL in a bit of trouble. It's going to be downgraded. This is a story that NDTV Profit broke. There's a chance that there could be up to 9,000 employees that are sacked. That's seeing a big cut over there. Oil India, of course, is seeing pressure with the entire oil and gas pack. Defense plays also quite poor today. And look at an HAL. They're facing the heat. On the upside, Garware Tech, doing okay. I think a clutch of liquor stocks because of the Andhra policy that has come in. That's one of the few spaces where you're seeing some green. United Breweries about 4% up. And apart from that, some of the NBFC or broader BFSI plays will see an upside. But overall, Niraj, I think the mood has soured a bit after the euphoria we saw in the morning.
The broader end of the spectrum certainly showing that I think individual portfolios would be hurting and hurting very, very badly. So I think that's the piece. And, you know, everything from wind equipment to CDMO to some of the tech businesses, a lot of real estate, a lot of these businesses are hurting and hurting very, very badly. So that is something that should worry investors for sure. Remember, telecom is a separate story and there are reasons, and we'll of course just talk about telecom in great detail. But beyond that, I think there is an issue out there, and that is something that should worry people as well. Well, you know, we'll get in our experts in just moments from now to talk about what to do in a scenario like this from a market's perspective. But we should get to the top story in just moments from now, because the top story really is that the Supreme Court earlier today rejected the telecom operators' plea seeking a recomputation of their adjusted gross revenues. Remember, Vodafone Idea, Bharti Airtel and various other telcos had actually filed curative pleas against the 2019 top court verdict in the case. The question is, what does it mean now going ahead for some of the telcos? And what is the impact of such a move? My colleague Rucha first joins in to put this into perspective. Rucha, good afternoon.
Good afternoon. Thank you. So I'll start with what are AGR dues. Well, these are the dues which are paid by the telecom companies to the government in return of using their spectrum license. Now, government calculates this on the basis of total revenue, which includes revenue from telecom as well as non-telecom business. However, the telecom companies were really upset about this fact, and they said that only revenue from telecom business should be included while calculating these dues. And then they filed various petition and plea against this kind of move by the government to various authorities, and the latest plea filed by Vodafone Idea was in October 23, and today the Supreme Court has rejected that plea and said that the telecom companies are required to pay the AGR dues. But then we'll move on to the quantum of dues which are payable by Vodafone Idea, Bharti Airtel and Reliance Jio as well. But starting with Vodafone Idea, now it owes around 70,300 crore of dues to the government. Bharti Airtel owes around 44,000 crore dues. Well, there's no major dues payable by Reliance Jio because it started in 2016 and has already paid their dues to the government. Now, moving on to the kind of cash that is lying on the balance sheet of these telecom companies, if we can move on to showing the cash, we'll see that Vodafone Idea has around 535 crore of cash and Bharti Airtel has 16,340 crore of cash. So a huge sort of asset liability mismatch is seen over here, but Bharti Airtel has lower dues than Vodafone Idea and higher sort of cash balance. So Bharti Airtel is better positioned than Vodafone Idea, and Vodafone will be hit the most because of the rejection of plea by the Supreme Court. But then let's look at the kind of timeline going back in 2005 and 6 when all this started, where government took the decision of how AGR should be calculated, and and the telecom companies were upset. And then in 2019, these telecom companies had filed a plea against this kind of decision taken by the government. And even moving ahead in 2020 and 21, telecom companies, filed the plea, but then it was rejected. And Bharti Airtel paid about 18,000 crore of dues, and Vodafone Idea paid about 7,800 crore of dues to the government. But as I rightly mentioned, in October 23, Vodafone again filed a plea which was rejected by the Supreme Court today. So all in all, just concluding, number one is that telecom companies will have to pay these dues to the government, and number two is that Vodafone Idea will be hit the most because of its huge asset liability mismatch over here. Back to you.
Thank you for that, Rucha, and for putting that into perspective. Gurmeet Chadda joined us now, Managing Partner and CIO of Complete Circle. Gurmeet, great to have you on the show. And what's an important day? We're going to spend the first few minutes just focusing a bit on what happens to Vodafone from here on. I mean, this is one stock which is a retail investor favorite, has had a whole host of different calls on it. In the last few weeks, you've seen one brokerage house have a very, very positive view, one have a relatively negative view, both deeming it high risk. The worst case scenario in terms of risk has come to unfold, you think, for Vodafone?
If you recollect our discussion on telecom some time back with you and Niraj, I've been making this point that, sometimes in the process of identifying, turnaround stories, we missed something which was very evident, which was Bharti, in the telecom. Look at the way Bharti has gone up. So issue, I think, which I've been reiterating is while the capital raise was positive for survival of Vodafone and some of the debt got converted into equity. But if you see, it was unlikely they could generate any free cash flows for at least next 4 or 5 years. It also meant that they will do significantly lesser capex. Telecom is a capex intensive business. You need to continuously upgrade to different networks. They haven't even started on 5G technically in terms of offering that. They continue to lose, I think they'll continue to lose market share. This recomputation plea being denied obviously is bad news in terms of any hopes which we had in terms of, they coming back. Plus, you needed an ARPU of at least 240, 250 for them to come back on track. So it's a bit of a chicken-egg situation. You need to focus on network, bring back people, then move up the ARPU. And that unlikely is going to happen with the negative cash flow position they have. And Bharti, on the other hand, it continues to just do well. Industry-leading ARPU at above 210. Look at the Airtel business, the Airtel home business, the digital TV portfolio, all seems to be doing well. And even Africa now seems to have stabilized. In fact, there could be one big trigger which is your home broadband. We have 21, 22 crore households currently. The penetration is just 2 crores. And if, they can do the sachetization they did in terms of prepaid connections in wireless, I think that could be, make internet penetration go up even further in Indian households. So I think the better way to play telecom story is to play the telecom value chain. The best, the listed player technically now is Bharti. Then you have something like Tata Communication, which has guided for 28,000 crores of revenue, of which they are saying the data alone and the digital portfolio would be 60%. And they are talking of, monetization levers like real estate, data centers, etc., which they can use to, fund this growth. And then you have something like maybe a Tejas network, which makes, telecom equipment and networking equipment across the value chain, across customers, across the value. So I think very gung-ho on digital infrastructure story.
No.
Just
So,
that you need to choose the right
that's true. But let me come back to Vodafone. You're right, you need to choose the right players. Maybe seeing the supply chain is a better idea. Bharti looking better off, and you can see that in the stock price, where the AGR hit might not be that bad. But what to do with the Vodafone right now? That's the question.
No.
How much more of a free fall are you expecting? Because the only light on the horizon, if at all, is the conversion of dues by the government into equity. Would that be seen as a positive? Where does this pain end?
See, I think I've been making this point that at some point of time there could be equity dilution also. And, because the net worth is negative. So, my view has always been to avoid till the time they get a very strong player, who comes in infused not only just capital, but also, you need a strategic investor with deep pockets as well as, the cutting edge tech abilities to bring any life to it. I think dues getting converted, dues getting delayed, government owning some stake. I mean, the government also owns BSNL with due respect. So in my view, as I said, the only trigger to me is significant, and I'm repeating the word significant capital infusion, and that too by a static investor. As and when that comes in, I think that's the point you start to take an investment call around this. Right now, all we are doing is just speculating that, this will happen, that will happen. That is not investing. That is speculating in my view.
Okay. Gurmeet, one quick word on Indus Towers and what happens thereof to that, because some part of that gain was also on the back of Vodafone completing its dues.
Absolutely, Niraj, and I think the stock is showing that reaction today.
Yeah.
Anything to do with the financial health of a company, which is your major client, obviously. But I think, as I said, I honestly don't see survival as an issue at this point of time. I think there are two aspects we are discussing here. One is Vodafone surviving. Second is, making an investment case out of it. So I wasn't gung-ho a few years back. I'm not gung-ho even right now as an investment case. But I think in terms of survivorship, I think the government is clear it doesn't probably want a two-player, a duopoly in telecom. So we'll probably have a three-player, or maybe 2.5 player if I want to call that. So I think in Indus Tower it could be temporary in terms of the movement there. But again, that's the rental part of the business, needed in the telecom business. Tower is basically the rental part. I think the bigger value add is in terms of the software part, the networking part, the telecom equipment part. And the way the world is, we had globalization last 10 years. Now you're probably looking at regional blocks, data security, etc. is becoming huge issues. So you will see more and more capex happening by existing players across the value chain. And I think that's where I think there is more value in names like Tatacom, Tejas, and other digital infrastructure names in the entire value chain.
Okay, thank you so much, Gurmeet, for joining in today. Gurmeet Chadha talking about the big story today in the markets and really beyond the markets as well, whether Vodafone does continue in any real way without the kind of crush that was supposed to come from this relief from the Supreme Court really remains to be seen. Probably the government will have to step in. Is that a good idea or not? Are all things that will be discussed down the line. But 18% down on the stock right now at 10 rupees 55 paise. Kush Bora and Rajesh Palvia with us on the show today. A very good afternoon to both of you and great to have you in. Kush, let's start with your calls on the index.
Hi, first up, a very good afternoon to you and to all the viewers. I want to say let's go out and buy Nifty, but there are a few factors that are just holding me back from a technical standpoint. It's not an entirely convincing move. I think that is also depicted by the fact that, we did not hold anywhere close to the highs that we made. That said, the price action is, completely different. We've been consolidating here for some time, but then the base is shifting higher, which is also evident by the, derivatives data. So if you see the call and put option data, very surprisingly, there is a put option build-up at the 25,500 put option for the next week, which is an in-the-money put option. So that is suggesting that, at least the market is fairly comfortable, at or around these levels. So I think as far as, the Nifty goes, until the supports are broken, which comes close to 25,100, 25,150 zones, you should continue to hold your long positions. I won't go out and still make a very aggressive bet as a long position on the Nifty. So I'll hold my long position if I have one until the supports are broken. Bank Nifty, again, we've been very constructive on practically, at the, all-time high levels today. It was, it's off that. But I think, this momentum could very well continue. I think the next level to watch for on the Bank Nifty should be 53,500 once that is taken out, 54,200. So if you want to create a long position, like we've been speaking about for the last week or so, that long position on the index should come in Bank Nifty.
Okay. Well, Rajesh, in fact, that was going to be my question to you. Should one buy or sell the Bank Nifty currently? What is your call there on the Bank Nifty?
So, Niraj, only private sector banks are, showing strength. So, Bank Nifty is, though Bank Nifty is trading about to their near-term breakout level of 52,500, 600 zone, and the put-based concentration is also placed around those levels. So, looking at the data setup, yes, one can look to buy Bank Nifty around 52,000 850 kind of zone with stop loss of 52,650. And on the high side, once we able to take out 53 200 zone, I think there could be a rally towards 53 600 also. So Bank Nifty is also looking bullish at this moment, though some profit taking at higher level for mid cap and small cap space, but we believe that both indices Nifty, Bank Nifty are still holding the ground, and we believe once this supply pressure settle down, we could see continuation of up move for Bank Nifty also. Possible target towards 53,500 to 600 we can see in next couple of days.
Okay. So that's the call on the Nifty and the Nifty Bank. Now to specific stocks. Rajesh, I'll start with you first. What are your trading recommendations for the afternoon today?
So first one is Volta's clear uptrend. Stock is enjoying its all-time high trajectory. The way stock is holding the ground at higher level, we believe that here we could see furthermore round of buying action, and the outperformance is likely to be there in the stock prices. Voltas is buy for upside target of 1960. Your stop loss should be placed at 1895. Another stock is from the private bank, that is ICICI Bank. This stock also managed to register a new all-time high trajectory. Outperformance is there in this stock, and the way stock is moving in higher top, higher bottom formation, that clearly shows a sustained buying action in the stock. So we believe that ICICI Bank may continue furthermore upside. Possible target towards 1340 we could see, and one can place a stop loss around 1266 to buy ICICI Bank. Third stock is from FMCG basket, that is Nestle. After a long underperformance and consolidation, now stock managed to view breakout on the daily as well as on the weekly chart. The way stock has moved up in last couple of days, we believe that Nestle may extend its gain, and the possible target towards 2710 to 2720. So Nestle is buy with stop loss of 2615.
Okay, so Nestle is a buy on 2615. A whole host of picks for you today on the show, but let's come to some of those buzzing stocks and get a view on that as well. Kush, let's talk about the elephant in the room, Vodafone and Indus Towers. If you're holding, what are you doing now as an investor?
Apart from feeling a lot of pain, I think there's very little you can do now. I think idea time and again we've discussed that that's not one stock that you really want to trade or invest in. But then again, now if you of course there will always be contrarian players and people who are keen and interested. Now if you are holding, it's not a bad idea to exit even at the current juncture. But if you want to give yourself that last glimmer of hope, then I think a support zone for this one is at 9.5 and 8. Those are the long-term support zones that the stock has actually witnessed in the past. So maybe that could act as your stop loss, but not a bad idea to exit even now. Now, as far as Indus Towers goes, here we've seen the dent, but we are seeing the recovery. As opposed to Vodafone Idea, which continues to hit fresh lows for the day. In Indus Towers, we've seen a recovery. This is very close to the support zone of the 375, 380, where seeing the stock trade above that. This is one that you can hold. Your waiting period might perhaps be a little longer now, but this is still that this is one stock that you can hold. 360 is a very strong support zone on this one. So if you've got a position, your trailing stop loss should come in at 360. So Vodafone still an exit, and Indus Towers is a hold with a stop loss at 360.
So Vodafone run now, even if you can. What about your picks for this afternoon, Kush?
Sure, two of them, and I continue to maintain that hedged position, with a long and a short call both. So Anantraj continues to do well even in today's session. If you see, there is buying, and it's actually come in a little late in the day, perhaps just when the show started. It's gained about 1% or so after that as well. So Anantraj on a very strong footing, 680, 699 are your targets. 649 is where you place your stop loss. On the sell side, we've got Concor. We've discussed this sell call around 1,000 levels also in the past. The stock is continuing to move on the downside, broken the 200-day moving average as well 3 sessions back, and continues to slide lower. Now you're looking at the the medium-term support zone at 880, which should act as your stop, second target. 895 being an intermediate target, and the stop loss on this one comes in at 920. So Anantraj is a buy and a Concor is a sell.
Okay, Anantraj is a buy, Concor is a sell, and those are, sort of the topics that we have this afternoon. But let's shift focus. We have a superb speaker to talk to us right now. Rahul Bajoria, BofA Securities. We'll be talking to him in a few minutes from now. But an important day, because remember the big event that we've been waiting for, which is the Fed cut, is now behind us, better than what was expected, 50 basis points. Markets have absorbed it, celebrated, and then now taken a break. That's what's been happening really on the index. And like Kush said a short while ago, he's keen to go long, but a little hesitant on the Nifty because of what's happening. A bigger cut really in the broader markets. Look at what's happening with the mid-cap and small-cap index, seeing a bout of pain that's going even further than that. I'm going to come to you, Rajesh, on some of the stocks that are buzzing today. And let's look at some of the liquor players, Radico, Tilak Nagar, all of them running up and then losing their gains completely. On the charts, technically, is that story also done? Tilak Nagar Industries off its highs, but still at least in the green. UBL, any of those that you like?
I think most of the stocks have attracted the profit booking, be it Radico, United Sprit, and other stocks. So I think most of these stocks have run up quite well in last couple of weeks, and the way market is also showing some bit of profit taking from the higher level. So I think it's in line with the market behavior. Though if we analyze on the structure for Radico, still stock is holding the strength on the long term to medium term chart. I think in this correction, again, if its stocks comes around 2060, that's the important support area for the stock in the decline. So I think wait for another 2-3% or 2-3% kind of correction in the stock. And if it's hold about 2060, I think some pullback action we could see from those levels. Even in the United Split, we have seen a very strong run up and some corrective move is happening in this stock. Stock is still holding above its near-term, short-term moving averages. So I think again in this correction, United Split is again giving you opportunity to buy the stock. One should wait for the level of 1500 and that's the important level in this correction. I think around those level one can start buying in this stock, and possibly again stock may resume its uptrend. So at this juncture, we will keep stop loss of around 1470 to buy United Spirits also in this decline.
All right, Rahul Bajoria with us, Head India Asian Economic Research at BofA Securities. Rahul, great to speak with you, and congratulations on the new gig. Great to speak to you after you've joined this position. And on a good day, important day to understand what's happening with global economy, what's next for the Indian economy, etc. So let's start with that. The Fed has started the process. The baton now moves to Bank of England, Bank of Japan. When do you think the Reserve Bank of India jumps in with a rate cut?
Thank you, Tamanna, for your wishes. So I think at this point in time, the guidance from the RBI has been fairly clear. The governor has been sort of indicating that, they are still not done with the last mile, management of inflation. And as the target alignment is in sight, I think we are going to see maybe a shift in the policy communication in the last quarter of the year. So we think that while October is unlikely to be a live meeting, December is the first instance where we could see a small rate cut cycle begin. We think that inflation appears to be reasonably well in check, and growth also cyclically seems to be softening a bit, and that kind of sets the tone for the RBI also to move. But then it is going to be a much shallower rate cutting cycle in India than what we are likely to see elsewhere.
When you say shallower, what do you mean? What are you penciling in for the rest of this year, Rahul?
So in the current fiscal year, we think 50 basis points looks like a reasonable assessment. So, that kind of takes us to from 6.5% to 6% by the February meeting. And then we think that the RBI again will look at the supply side dynamics, wait for the monsoon cycle to play out. And if monsoons are normal as we are entering a La Nina cycle, then maybe another 50 basis points in the next fiscal year by December 2025, which takes you to a neutralish kind of a rate at 5.5%, which I think is the right level for a country which is looking at 7% trend growth and around 4% inflation.
In terms of economic outlook, and let me come to some of the points that were made by the Federal Reserve in that meeting, focus now for them at least shifts more on labor market rather than inflation as an issue. Will further 50 basis point cuts, at least in the rest of this calendar year, drive more flows towards India? How do you see the flows and India equation in light of what we've heard?
Yeah, so I think if we sort of take a view of what's happening in the US, there clearly seems to be an emphasis on kind of, trying to recalibrate the monetary policy, monetary policy to where the state of the economy is. And we do think that a front-loaded rate cutting cycle is quite likely. So we are looking for another 75 basis points of cuts in the US in the next quarter. So that's, 150 basis point and 125 basis point, depending on the incoming data. And then another 125 basis points of cuts next calendar year. So you are going to see a reasonably large cutting cycle. Now, in context of what it does to India, I just came back from the US. The feedback on India remains fairly and very comprehensively positive as far as structural flows into the economy is concerned. The lack of currency appreciation does make people a little bit reluctant to kind of really put their alpha to work in India right now. But I think from a structural standpoint, flows both in equity and debt markets are likely to continue, and we probably see a fairly strong BOP position both this fiscal year and next fiscal year. So I don't think that the investment outlook is going to change materially. What you probably end up seeing is just a timing of it might be a little bit more backloaded in the context of where the rate cycle in US pushes flows into emerging markets.
Rahul, good afternoon. Niraj here. I heard you say that it will be a shallower cycle, and maybe you responded to that, but I would still want a pointed answer, if you will. What is your sense? Do we see action in India in October? Do we see December? Do we see Feb? Or is it difficult to call that right now?
No, I think our baseline is that December is the first meeting where you will probably see a rate cut coming through in India. We are expecting only 50 basis points in this fiscal year, which is kind of getting priced in as far as, say, the fixed income markets are concerned. But next year also, we think there's room to cut rates by 50 basis points in India. So you're going to not see India move in line with what's happening with the Fed. I don't think that's ever been the case in the last few hiking and cutting cycles. But then with inflation aligning itself closer to 4% than we have seen in the last few years, there is no real need to keep real rates very elevated as it is right now. And credit growth is coming off as well. So, you are seeing signs of RBI also kind of coming to a point where rates can be recalibrated slightly lower. Not a need to really cut, but, kind of recalibrated slightly to the new economic realities.
Well, great to speak with you as always, and look forward to chatting with you soon. Rahul Bajoria there. The BOFA view on interest rate cuts. We might see 50 basis points as far as India is concerned in this financial year, so not quite as aggressive. But that will be the next big trigger as far as markets are also concerned from our perspective. Time for a very short break. On the other side, we get you the top BTST ideas. Stay tuned for that and a lot more. You're watching India Market Close. Just about half hour to go to a day of trade that started out much more positive than its ending. A little bit of concern there coming in, creeping in definitely. Niraj Diwan joining us, independent market expert. Niraj, hi. Great to have you on the show. I want to take your view on the kind of hit we have seen in BFSI stocks and relatively better, the Bank Nifty now coming off. Just want to understand from the point of view of Fed impact really getting baked in, how would you look at some of these and what would be your top picks here?
Yeah, hi, good afternoon. Thanks for having me on the show. I think the BFSI space is one which should be positively impacted by the Fed rate cut, and somewhere down the line, maybe toward the end of the year, maybe RBI may also follow suit. So I think BFSI space, you can go with a large cap name according to my understanding, because that is where you still have comfort. If you look at HDFC Bank or a Kotak Bank or ICICI Bank, you still have that valuation comfort. You can go somewhere down under and look at some private sector banks like IDFC First Bank also. So you have comfort across this segment. So I think you can take your pick from the large caps, and I think at these valuations which they're trading at, I think with the 1.5 year view, you can make a decent return.
Niraj, what's the view on some of the NBFCs? I mean, Bajaj Housing Finance listing has created quite a stir. The stock is down today. And a lot of people might be thinking that, oh, this is the dip that we need to get into. But it is an expensive stock for sure. So which side are you tilting on fundamentally? Good afternoon.
Yeah, good afternoon. You know that we are always seeing fundamentals. For us, valuation is very important. We'll not, go chase some stock just because, market is chasing it or it's from a very, renowned, corporate house. Valuations is what ultimately matters. So at 150, 160, at, more than 5.5, 6 times, price to book, I will not be really chasing Bajaj Housing Finance, and I would look at other options which are still available at reasonable 2.5, 3 times. So even for a good corporate growing housing finance, I will not really like to give 3.5, 4 times to the max. So at this valuation, definitely I'll not be looking at Bajaj Housing Finance.
Okay, so you're not looking at Bajaj Housing Finance either. Valuations now becoming uncomfortable, but one company in that space which is getting quite a bit of heat is IIFL Finance, and this is an NDTV Profit exclusive. They may face a ratings downgrade on delays in removal of the RBI embargo. Rating agencies have conducted a review recently. What we're learning is that there is an issue owing to low tenure of gold loans. As of August, gold loans were at around 12,000 crore rupees on their book. IIFL Finance may undergo layoffs if bans persist. There is one figure out there saying that you could have layoffs of at least 9,000 people. IIFL Finance already is in the process of laying off employees in unprofitable areas, and there are at least 4 to 5 gold loan employees each in 2,700 branches. The company has provided a compliance report to RBI in August. Now, the story broken by my colleague Vishwanath Nair, and after that, look at what's happened to the stock. I mean, the context of this, of course, that in March this year, RBI had ordered IIFL Finance to stop lending against gold with immediate effect. And that situation doesn't really seem to have changed much for IIFL Finance, and hence the ratings downgrade, which could be around the corner. Niraj, just wanted to understand if you're looking at this stock and this space.
The stock looked oversold yesterday also, because after the ban, the stock is really corrected. But I think till you get more clarity on this bad news, the ban still continues. And if there's a rating downgrade, that can be double whammy for them. I think better to avoid it for the time being, get some more clarity. Once this is settled and you have clarity, and then only, even if it's a little higher, it doesn't matter. But you enter into the stock only once you have clarity on this gold loan issue and the rating issue.
Rajesh, are you looking at IIFL Finance? Any value there at these levels?
So I think some recoveries taking place in this stock in last couple of weeks. Stock is now struggling to cross its immediate supply zone, which is placed at around 530 kind of zone. So until the stock not crosses those levels, some consolidation we can see for some more time. And on the breakout of 540, there is a possibility of 600 kind of target on the high side. But on the downside, the immediate and important support is placed at around 466. So I think 466 to 520 would be the consolidation range for some more time, and either side breakout will decide the major direction for the stock.
Okay, well, so that's IIFL Finance. It's difficult to get the calls on Bajaj Housing Finance from a technical perspective, but it might be easier to do that on the liquor names, though I think we've discussed some of those. But fundamentally, what would this mean? Let's first understand the issue in detail. Chandrababu Naidu-led the government has cleared a new liquor policy which has adopted a more private retail system. Mahima Johnson, what this means for some of the alcohol players. Mahima, good afternoon.
That is, the policy is aiming at quality, quantity and price. Now this comes after in 2019 Andhra Pradesh had almost banned buying alcohol from branded companies, and people did face serious repercussions after this. Their health got deteriorated, and after this a new excise policy has come out, and all liquor brands will be made available, and this will be from 1st of October, and private shops will also be allocated through a lottery system, and a non-refundable fee of 2 lakh will be paid for this. 13 premier shops will be set up across state, excluding Tirupati, of course, and the alcohol from all brands will be made available just at rupees 99 for every 180 ml is what the policy says. Now, a couple of companies that could benefit from this, because even before 2019 these companies were major suppliers in Andhra Pradesh. It's United Spirits, United Breweries, Tilaknagar Industries and Radico Khaitan. Tilaknagar Industry has recently launched a new brandy in Andhra Pradesh, and it had acquired Prague distilleries in Andhra Pradesh between 2008 and 14, and since then it is operating from that particular distillery in Andhra Pradesh, and roughly in FY24 the distillery had a revenue share of the revenue share from that distillery increased by 34%, and it has a capacity of over 6 lakh cases per year. The next one is United Breweries, where volumes in Q1 were largely driven by Andhra Pradesh, and it had an operating capacity of 30% only because of the ban. But going forward, of course, it will the new excise policy will benefit United Breweries, because historically Kingfisher has had a share of 75% almost from Andhra Pradesh, and United Brewery eyes revenue increase with this new liquor policy is what the MD has already said. And lastly, Radico Khaitan also has bottling units in Andhra Pradesh. So all of these companies and stocks will be in focus on the back of this.
Okay, thanks Mahima. Niraj, there's a bit of a sell the news happening here, but intuitively this should be positive. Are you constructive liquor, the businesses?
Yeah, actually, we are constructive liquor. I also like, some of these companies, which I think, though you've seen some movement in the stocks already happening. One stock that I was looking at was Global Spirits, because that stock had corrected a lot. And once there was some improvement in the availability of raw material, you saw, some move happening. That stock has already moved, I think, 30-40% in the last month or so. So I think that is the case from a lot of other liquor companies also. If one has a longer term perspective, I think even at these valuations, even at the current prices, the stocks do have value over a 1.5 year period. But short term, I'm not too sure, because they've seen a move. So there may be some consolidation, some profit taking down the line. But over 1.5 years, I think still there's value in liquor stocks.
Okay. And Kush, what is your sense? Anything that is bottoming out, or anything that you would go out and trade on the short side in this liquor space?
Not on the short side. I mean, if I have to pick a short call in this space, then it'll be United Spirits. And the only reason being that, we are seeing some negative divergences, but that's already playing out. So you wouldn't want to do that. In fact, I take this dip in Radico Khaitan as a buying opportunity. The stock was already in an overheated territory, perhaps waiting for a trigger to correct. It's a sharp correction today, but I think that's a bit of a healthy sign for the stock. Now, if you do want to wait and give it one more day, then I would suggest, wait up until the level of 2060, 2070. If you do get it around those levels, then the entry point is very attractive and, does make for a good buy from those levels. United Breweries is also, a good buy at the current juncture. The only challenge is that 2150 has been a bit of a resistance in the near term, but given what's happening in the broader markets in the liquor space, I think that's, we'll take this. We'll take this move where the stock is now resisting close to that 2150 mark. With the kind of volumes that you're seeing, I won't be surprised that in the coming days the stock breaks, this resistance band and moves toward 2200 and perhaps even 2250 kind of levels. So United Breweries and Radico Khaitan, slightly different, fortunes for the day. But I think, both seem like a good buy for different reasons at the moment.
Okay, Radico Khaitan down 6% now after all of that euphoria. But the stock which hasn't let up since this morning is NTPC. Buzzing today since its subsidiary, NTPC Green Energy, has filed for an initial public offer. The reason is also because NTPC shareholders will get some advantage in applying for the offer, and which is why you're seeing that buzz coming in. Mehika joining us to give us more details of the IPO and what the potential market cap of the company will be.
NTPC is buzzing in trade because its renewable energy arm, NTPC Green Energy, has filed for its IPO yesterday, and the company will be raising 10,000 crore via an initial public offering, which will only consist of a fresh issue, and majority of the proceeds will be used for debt repayment and general corporate purposes. Now, when you talk about the valuations of the companies, well, let's first start with the listed peers. The company has two listed peers. One is Adani Green Energy and Renew Energy Global. When you look at the EV to EBITDA multiples of these companies, Adani Green trades at a 50.9 EV to EBITDA multiple, and Renew Energy Global at 13.73. So when you take the average of these two, it comes to 32. And when you talk about the potential financials in FY25 for NTPC Green Energy, well, Q1, the company made around 650 crores of revenue. So based on this run rate, it could see revenues of around 2,600 in FY25 and a 2,300 crore EBITDA in FY25 if it maintains its FY24 margins of 88%. So when you talk about the potential market capitalization, it could stand around 75,000 crores because taking the consideration of the 32 EV to EBITDA multiple with the FY25 estimated EBITDA. And this could lead to a potential equity dilution of around 13% equity, which comes up to around 100 crore equity shares. The company has a total outstanding share capital of 750 crore equity shares.
Okay. So that's one of the reasons why NTPC is in full flush today. Kush, let me come to you on NTPC on the charts first. Still standing strong at 2.5% up in a market which otherwise has lost some steam.
Absolutely. And it's not a bad buy. It's just that it's not a typical trader counter. I mean, today, the stock would have seen a fair degree of upside and then cooled off from there. But I think this is the one for, a positional bet, a medium term kind of, an entry. So NTPC, you can consider at the current juncture as well, very neatly placed. This is the second time this is testing the 420, 425 kind of, levels on the back of very strong volumes for very obvious reasons. I think on the downside, you can place your stop loss, and this is a positional one close to 405 levels. On the upside, the stock could very well test 440 and 460 kind of zones. It's just that, you'd want to stay in this for some time, let's say a couple of months. Don't take this as an immediate, a PTSD or, a very short-term trading bet. Be in this for some time.
Okay. Niraj, what do you make of the buzz in NTPC? And then, of course, I'll come to you on the whole IPO excitement and NTPC Green. But let's talk about the NTPC stock right now.
I think today's a buying industry because, people are buying it to be part of the shareholder quota so they can apply for the NTPC Green IPO. Otherwise, the stock has run up a lot. So though I agree that this is a very good long-term bet, and if one is holding it, you should hold on the stock for a longer time. And but I think for entry opportunities, one can wait and get a little better opportunities, some consolidation, some correction. I don't think one should be chasing it, and to get an IPO as a shareholder, you just need to buy one share, two shares, you get that shareholder preference. But otherwise, it's a good long-term bet. But then for the shorter term, I think the move has happened and it may consolidate around these levels. May not give you that kind of return over the next 6-8 months, but over 1 to 2 years, 3 years, definitely it's a very good investment.
And are you at all excited about the NTPC Green IPO, Niraj?
Yes, definitely. I think that will be also pure green power play. So depending on what valuation it comes at, I think there will be a lot of excitement. And normally we've seen that such kind of IPOs, which they do leave something for the investor when they come with the IPO. So I'm sure that they will also be leaving something on the table, and there will be a lot of interest in this IPO.
The parent companies, there are at least 5 or 6 parent companies right now which have IPOs coming. So just the point that Niraj Dhawan made, and I'm just going to come to it in a bit of detail. Basically, you have shareholder quotas in IPOs, and that makes it very interesting. Because if you have an IPO coming, then people come in and buy that company in hope of that shareholder quota, right? That's what's happening with NTPC. You will see that happening with a Hero as well, because Hero FinCorp IPO is expected to come. Tata Motors at some point will be hiving off its electric mobility. So there's an opportunity there. Manappuram Finance, Muthoot are some of the others who are expecting to bring IPOs, and hence you are seeing this kind of an enthusiasm. Just as a play there, Niraj, do you think that makes sense as a strategy?
Yeah, it depends on what company we're talking about. Like NTPC is a very good investment otherwise also. So even if you're investing in it and get a shareholder quota in the NTPC Green, IPO is definitely good. But it depends on what company, like Tata Motors, maybe one needs to look at what is happening to the EV space for currently, in the shorter term. So you have to really see where, if you just need a shareholder quota, you can just apply, you can just take 1 to 5 shares. But to really invest in a company, we need to look at the valuation of that parent company and then only get into it.
Okay. So all right, be selective if you're trying to see that parent company play. But remember, today is a day where we are still absorbing the response to the Fed outcome and wondering what to do next. The financial space can do extremely well, according to Gautam Shah from Goldilocks Premium Research. Listen in to his topics.
Other pockets, that we continue to like would be pharma and IT. I know IT had a down day yesterday, but overall structurally we remain very, very bullish. And the two other spaces which I see are potential big winners over the next 3 to 6 months. First would be metals. I think we've seen an excellent comeback in the last 5 to 7 days. And with what's happened yesterday in the US, I just feel that the metals index is ready for a breakout past 9,600. Once that confirmation happens, we are looking at a 1,000-point move on the metals index. And chemicals, very quietly over the last 6 weeks, we've seen a nice rebound in all the top stocks. Look at the Deepak Nitrate, look at the Tirumalai Chemicals. Many of these names have done very well. So that's again a pocket that we like. And not to forget FMCG. ITC is quietly sustaining above 500, Godrej Consumer, Hindustan Unilever. So these are the pockets that we like.
Okay. And wondering if those pockets have some strength fundamentally as well. So that's the other question, would you buy? Because I think Gautam spoke about this. Rajesh Palivia spoke about a Nestle. Kush spoke about an FMCG stock today or yesterday. Niraj Dhawan, is it prudent to buy a large FMCG company as an investment right now, or are there other pockets available?
I think there are other pockets available. If you look at FMCG also, if we looked at this 4 or 5 months back, March, April, when, you were getting Hindustan Lever at 2,200 rupees, you're getting Britannia at 5,000 odd. But that is the time to really accumulate those kind of stocks. You already got the return and you can hold on to it. But to make a fresh entry after seeing this kind of run on the last 3 or 4 months only, you may get frustrated buying them at these levels, and then you may hold on to them for 6 months, 8 months without too much of a return when other market may give you better return. So I think IT, I agree, IT though has run up, but still there is something which has happened globally. This event which has happened, this US Fed rate cut, will have an impact on that space also. And there, like the statement that is coming from US is that the economy is still resilient, still doing well. So IT is a space, even after the run-up that we've seen over the last month or 2 months, still I think has that valuation comfort, and you can still get a return from these levels. But FMCG, I think, has seen that run-up, and I don't see, maybe there can be some up move because monsoons were good and inflation India may come down a little bit more. So they may get some impact because of that. But I think the major move has happened for this year at least.
Okay. So those are some of the top picks that you need to look at this point. But we'll come to the BTST calls for tomorrow. Just about 10 minutes to go, and Rajesh, let me start with you. On what do you think would be the top calls for our viewers watching right now? What would be your top trades for tomorrow?
So another banking stock where we are focusing, that is Kotak Bank, again from the private sector bank. And the way Kotak Bank is moving in upsloping channel on daily chart and stock comfortably holding all its near-term moving averages, we believe that this stock has potential again to surpass its previous swing high of July 2024. And the way stock has moved up in last couple of days, Kotak Bank can be looked at to buy. Upside target 1930, 1940. Stop loss can be placed at 18550. Second stock is Oberoi Realty. Stock is holding about to its breakout on a weekly chart that has happened in the last week itself. And the way stock has formed a base, we believe here we can see a good traction on the buying side, and possible target towards 1880 we can see in Oberoi Realty. So here also one can deploy some long trade with stop loss of 1820. And the third one is Max Health. Falling trend line breakout is taken place in this stock, and the way stock has shown strength on a weekly as well as on the daily chart, we believe that Max Health can extend its gain. 1020, 1030 would be the next target. Keep your stop loss around 975.
Kush Bohra, what is your top BTST or STBT trade?
How did you know? Because Tamanna's only we are talking about BTST and I haven't.
Tamanna is an eternal bull. I'm kidding, really. I'm the eternal bull, really. If anything, Tamanna is a realist.
But optimist hiding behind that realist also. Kush.
I fall in that camp. There is money to be made on both sides of the market, isn't there?
Yeah.
Right. So if you're looking for a BTST, then I think that trade is done for the day. We spoke about Anantraj. The stock is up 1.5%. 680 was the first target. The stock is well and truly above that. So if you're looking for a BTST trade, I think you could just perhaps take some money home, enjoy that profit. If not, you could hold that for that target of 699. Now, as far as the trade for tomorrow goes, it's an STBT. The mood of the market isn't really all that encouraging, and the indices don't really tell that complete picture. Coal India is a stock that I have on the short side. Concor we've already discussed. Coal India is a stock that you might want to consider as a hedged position on the short side. The downward target here is 417, 465. The stop loss is 485. And this is purely an STBT call. If the stop loss is hit, you're better off exiting this. The stock might reverse from there. But from a near-term STBT perspective, Coal India 470, 465 are the targets, and 485 is where you place that stop loss.
Okay, so do keep an eye out for this as well, and those are good levels. So 485 stop loss, and the target is 465. The current is about 477. PSUs have taken a bit of a stick. Niraj Diwan, come in on this. Oil prices fall. It should be negative for upstream, positive for downstream. Now, we're seeing upstream correcting, but we're seeing downstream correcting as well. I mean, since the time oil has receded sub 70, HPBP IOC have actually been in the red. Why so?
I think the oil needs to stay, according to my understanding, though I'm not oil and gas expert, but according to my understanding, it's between 70 and 80 is when it's good for the marketing companies also. And because they also have to keep a margin. So I think below that, the margins also shrink in absolute value. So I think above 70 and between 70 and 75 is good for oil marketing companies. And if it is going close to 80 and above, then of course the ONGCs and all tend to benefit. So I think 70 or close to 70 is somewhere where both whether upstream or downstream get a little cautious as far as profitability is concerned.
Yeah, but serious pullbacks today into some of these stocks. Rajesh, BPHP IOC and particularly BPCL, which is down about 4%. I mean, are there more downsides here, or are they bottoming out?
No, still we may see furthermore supply pressure as stock is now broken. It's a 50-day moving average support area. And again, the previous swing low of August is also broken. So I think we may see furthermore, correction in the stock if it's sustained below to 330 kind of level. Possible downside can extend to the level of 318 to even 315 kind of level. So I think again one should revisit around those level whether the stock able to hold out those support area or not. But for long term, yes, stock structure is bullish, but near term structure is suggesting some more pressure we could see in the continuation of this down move.
Okay, well, gentlemen, all of you, thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time this afternoon. And by the way, speaking of global opinion as well, we spoke to Harold van der Linden of HSBC, and rate cuts in the US, according to him, could be net positive for emerging markets. But even with investments in Japanese markets cooling, the money may not necessarily flow into India. This is his view. Listen into a slice of the conversation that we had with him.
So the view is that these rate cuts will be positive for emerging market assets. And we like risk. Emerging markets is more risky than developed markets, so that's good. And what you're going to see is that because it doesn't make as much sense now to keep money in money market deposits anymore in the US, you want to put money somewhere else. And equities and Asian equities will fit into that as well. In addition to that, what we also see is that appetite for the Japanese market is cooling. So you see that money is coming out of Japan. That doesn't have to go into Asia, could be going somewhere else as well, but that's something to keep in mind as well. So there are two sort of dynamics that is good for Asian markets. And then the question is, of course, will they go to India? Now, the funny thing is that for global fund managers, they're underweight on India. That's got nothing to do with their view on India that has been negative or so. On the contrary, most of them are positive. It's just that they feel uncomfortable with the high valuations, and the local investors have bought up that market, right? So they've pushed the foreign investors out.
Well, Harold van der Linden mentioned about how valuations are probably a concern. Okay, let's start wrapping up the markets. It deserves a full 2.5 minutes today simply because of the way it's behaved. Started off well, rate cuts are behind us, but there is a bit of a sulking that's happening. You would argue that this may be a day's plan as well, that the bias probably still is towards the upside, at least in the short term. But today, we've seen the broader markets really cracking in trade, because if you look at the mid caps and the small caps, that's where the pain has been. But even in the mid cap space, by the way, from the lows of the day, we've come off. I wonder if the small caps are showing the same kind of resilience, a little bit, if you will, not as low as they were. So maybe, just maybe, the breadth too is improved a wee little bit, but clearly the advanced decline ratio shifted within the first 1 hour of trade and then stayed broad. But yes, a little bit of a closure relative to the worst performance that we had at some time in the last 1.5 hours of trade. But let's bring up the heat map and show you what's moving and what's not. A lot of red with PSUs taking it on the chin today. Coal India, BPCL, ONGC. There is a bit of weakness in IT today with TCS, Wipro, Tech Mahindra, HCL Tech, and some of the others also in the red, but more green than red. NTPC, an odd one out in the PSU pack. Kotak Bank, there is Nestle, Titan, Tata Consumer, Maruti. So FMCG's made its presence felt to an extent. Some consumption names out there like Titan too, featuring in that list. And select auto with the likes of Maruti and Bajaj Auto being in the green. But yep, PSU certainly taking it on the chin. And Tamanna, a bit of a recovery for the broader end of the spectrum.
A bit of a recovery, but I don't know how much we can take heart from it, because the fact is that directionally we are still seeing a tough time really in the markets. I mean, the Nifty definitely recovering to some extent. Banks in focus. Let's pull up sectoral indices. You have banks and financials part of the saving grace, relatively speaking. IT showed some recovery earlier in the day after the knock it took, but slid back down. So those gains are not really holding. Private banks are doing relatively well. Let's just take you through the top losers on the BSE 500, and then I'll come to the top gainers. Vodafone and Indus stand out. Vodafone 19% down. Now the thing with the Vodafone story is, considering that a lot was depending on this Supreme Court order, can't say for sure that you will see this bloodbath ending tomorrow. So Vodafone in for more pain possibly. Indus Towers as a proxy. Radico Khaitan seeing a pullback after jumping on the Andhra news. On the winning side, Garware Tech doing okay. Century Textiles, United Breweries doing fine again because of the liquor policy in Andhra. So a mixed bag there. We'll have to wait and see what cues come in. Remember, Bank of England is the next big trigger to look out for. Do they follow the cues in terms of rate cuts? Are we seeing a shift in cycle, and what does that mean for India will be the big theme going forward over the next few days. But that's all the time we have on India Market Close for now. Thank you so much for joining us. Stay tuned. A lot more on the other side.